Start with you. Lots of news to digest out of the entire region today. Markets all lower on that China manufacturing data, but our market bucking the trend.
The Australian market did extremely well, and I guess our market was really offset by the fall that we saw in terms of the Aussie dollar. If we have a look at the intraday graph of the Australian market, this is what it looks like. And when those China PMI, the flash numbers came out, we did see an impact in terms of the Aussie share market, but nowhere near the size of the fall that we saw around the region in commodities as well as US futures. And one explanation is the Aussie dollar. This is the Aussie dollar today, and you can see just the magnitude of that fall there. In an export-driven market like the Australian market, we have seen that lower Aussie dollar being good news for some of the exporters. Stocks like Amcor up by 1.9%, QB Insurance, which has so much of their business in the US now, up by 2.1%, and we also saw Newcrest gaining by 2%. So altogether, the Australian market really outperforming today, up by 0.5%, despite the red on screen in the Japanese market, the Korean market, the Chinese market, as well as the commodities space. Overnight, we saw a negative lead as well. The US down by 0.2%. Back in focus with some of the European 10-year yields, the Spanish and the Italian 10-year yields reaching nearly a one-month high, but the Australian market really ignoring that, and more, as you mentioned, the banking space as well as the material space helping our market higher today.
Talk about some of today's corporate news and those results still starting to roll through. Sigma doing quite well on the back of its special dividend Julia announced today. Run us through the close in terms of the share price and what basically Sigma had to say in relation to its numbers.
Look, Sigma is a fantastic turnaround story, and it's undergone a lot of changes over the last couple of years. In fact, if we have a look at 2011, this was the best performing stock in the ASX 200, gaining 122% last year, while the market actually lost ground. And in the last few years, we've seen Sigma undergo some huge changes. It sold Arrow Pharmaceuticals, which it probably paid too much for back in 2005, paid off some of that huge debt that it had, and really refocused on its remaining businesses. So it's gone from a loss of $235 million in the previous corresponding period to a profit of $49 million. Now, that profit result was slightly lower than what we were expecting. We were expecting to see a profit result of $55 million. However, the dividend more than made up for it. We were expecting to see a 1 cent dividend, but they've come out with a 2 cent dividend, and not only that, a 1 cent special dividend as well. And that really helped to support the share price strongly today, and the shares up by around about 5%. Of course, there are still challenges left for Sigma, and I guess the biggest challenge is the mandatory cuts that we're going to see this year in the pharmaceutical benefits scheme, which will see about an average of 23% price cuts in terms of 200 of the drugs that Sigma is involved in. So Sigma Pharmaceuticals today having a good day and really backed by that strong dividend as well as the special dividend.
It was out with its first half results, also of course its parent company Washington H. Soul Pattinson as well. What's your outlook on Brickworks? I did speak with Rob Milner, of course the director and chairman of both companies there. He was basically still quite concerned about the state of Australia's construction market moving forward.
Well, it's a little bit of a strange structure, Brickworks and Washington Soul Pattinson. In fact, if we have a look at Brickworks earnings, EBIT, around about 51% comes from investments, and that's because of the holding in Washington Soul Pattinson. But of course, still about 50% of its earnings is driven by the residential property market, and that's been quite weak. If we have a look at Brickworks, it's Australia's largest brick manufacturer, and it has had a number of challenges in the last period because of plant closures. We've seen the cost per unit rising, but management do remain quite optimistic that we're nearing that bottom of the property cycle, and that would be a huge positive for Brickworks. Analysts aren't so sure. They're a little bit more cautious despite the rate cuts that we are seeing, but the key for Brickworks is that turnaround in the property market, and if we start to see that, then we will start to see Brickworks share price and profitability turn as well. But a difficult period, coming in with a profit of $49.5 million, but really not a huge reaction in terms of its shares, down by 0.5% today.
Yeah.